Hi, I'm Toby.
And I'm Nick.
And welcome to the Pure Property Podcast with Track Capital, where we talk about all things property and property investment. The aim of the podcast is to give you our industry insights and knowledge to help investors to invest intelligently. This week's episode, we're going to just look over what's happened in the UK over the past week and what outlook that sets going forward potentially, and also the question we're getting asked multiple times, as we have done recently, is now a good time to invest? So firstly, going on to the subject of what's happened in the past week, we've had Rishi Sunak being announced as Prime Minister. Now, Nick, obviously you're out in Dubai. Is that common knowledge out there? Is that something being sort of spoken about or in the news at all?
Yeah, I think the Western economy and Western countries in general is kind of on the minds of investors here. Obviously, with the currency linked to the dollar, it can have an impact. And also, don't forget, there's a huge amount of British expats here in general. So it is kind of on the surface, on the minds of some of the investors here. Overall, though, it's kind of like Dubai is a bit of a bubble, because as we say time and time again, or have been saying over the past one year or so now, it's very, very positive here. It's a very different climate compared to the UK. Hence why we're seeing so many people come here. So yeah, I think people here in general, they do keep an eye on the UK economy, because it can be a reflection of the wider picture as well. But yeah, certainly we're not in the media headlines or exposed to the amount of negativity that you guys are on a daily basis, for sure.
Yeah, you're right about that. And so, what does Rishi Sunak being put in as Prime Minister mean for the UK property market? Well, firstly, I think the main positive that I've been waiting for, and I think a lot of the market has been waiting for, is the stability this looks to bring. We've already seen the markets looking at him being installed as Prime Minister in a more favourable light. He's keeping the Chancellor of the Exchequer as well, which again is being seen in a favourable light. So that stability is something that we are hoping for, but will stay long term as well. And moving forward, it will just make the landscape a lot easier to navigate. Over the past however many months, it's been literally up and down, and you don't know sort of what days what, to be honest. And when you are investing in property, that is never a good thing, and it will put hesitancy into the market. And yeah, when people are sort of hesitant in the market, obviously not much happens, and that will affect the market in certain ways. So first and foremost, the stability, and I think I was hopeful he was actually going to be the Prime Minister first time around. Obviously, Liz Truss got in, but we saw what that did, and how that really sort of backfired massively. Her and Kwasi, what they did with that mini budget, just absolutely killed off the economy and the markets in a massive way. And obviously, we saw Rishi sort of predict that would happen. So I think that gives some evidence initially to how credible he is for the job, which is always good. And then Nick, obviously the age-old question. So what does this mean going forward? Now, I think massively the viewpoint a lot of investors are taking is, why would we look to invest now, or should we invest now? Now, it's kind of from our point of view, you mentioned about the bubble of Dubai. As a company, this month has been a bit of a bubble for us, because although the market has sort of been in a lull or instability, and the property market has been in the media a lot about, predicting a crash, all this sort of stuff, as a company, we've actually had our busiest month on record. So we're seeing a very busy period and a high volume of transactions. So when people do ask, should I invest? I mean, firstly, for you, Nick, what would be your response to that question? Should I be investing now? Is the right time to buy?
Yeah, well, as you say, this is whatever environment you're in economically and in terms of the sentiment of the market, people are going to be asking this question. But as you touched on, I really think that's important to reiterate that people are investing now. This is not just us saying, it's our advice, you should invest now, now's the best time. It's actually data. People are purchasing now. And it's not, what I found as well is, it's not just, experienced sophisticated, high net worth individuals that are just, deploying their capital to get it working for them because they don't want it left, in the bank or in underperforming assets. It's also, Mr. Joe Bloggs, who might have his first buy to let, second buy to let, and they're buying, in the northwest. Maybe they're moving money from the south east of the country. So it's a real diverse range of buyers that we're seeing, which actually goes to show the long term. The confidence in the medium to long term shape of the UK property market, and ultimately how it's going to perform. So, in terms of the question, should I invest now? I mean, as you probably guess, it's not a straightforward yes or no. It entirely depends on people's personal circumstances. I don't think you can be unsensitive to this. The fact that a lot of people are struggling. There's a lot of people that maybe are having to rent for longer than they would like to, and they're not quite getting that deposit together. Or there's a lot of people that perhaps have cancelled plans to purchase. So there's no question about it. That section of the market, I would say, is suffering. And, with the cost of living crisis going or sort of being exaggerated, there are people who quite simply don't have the capital to deploy at the moment, and it's not the right time to buy for that subsegment of the market. But if you're sitting on capital and you've got liquid cash there, which can be spent and it can be utilised, I would argue one of the safest markets in the medium to long term in the world would be the UK market. You're getting your money working for you. You're getting capital growth, even though it might not be at the rate it was in previous years. You're getting rental income because so many people need to rent. They might not be buying. They want, the flexibility. They want to relocate to maybe get a higher wage or something like that. So the rental demand's there. Going to have the rental income, going to have the capital growth, and the medium to long term performance of the UK market means for a lot of people it is a good time to invest. So yeah, long answer there. For some people it's not the right time, but I would argue if you are actively looking at investing, then now is as good as time as ever.
Yeah, and I think when you look at why some people might be hesitant to invest, I think that the main feedback we're getting and what we're seeing in the market, and again, it comes back to the landscape that we find the property market in. Obviously, we've got interest rates which nobody really knows exactly where they're going to settle. We've got the cost of living crisis, so affordabilities are being stretched, so that's stopping some people moving. And again, with the landscape not being too certain and all these sort of variables which are out of our control, that is putting people in a position to question what is the property market going to do. And again, it is under interpretation, and different people will view it in different ways. Now, our view is that there's not going to be a crash, slowdown, yes, but we've been saying that for a while. But in terms of why people would be hesitant, we completely understand why. And yeah, some people are right to be cautious. So the main people that I would probably put in the category of being cautious and maybe in the right frame of mind or the right position to actually sit back and wait. If you're looking to flip in the short term, I would be saying, yeah, you might be wanting to, you either run your numbers in a way where you're putting in a sort of a fallback and worst case scenario, so you can still come out either breaking even or making a bit of profit, or you do sit back and wait to see what the market's going to do, because that flip in the short term period is going to be very dependent on what the market does, and that will affect, of course, your profit, and is very risky. So that's probably one category. The other one is maybe somebody that is overstretching themselves to invest. So if you're literally putting every last penny and your personal circumstances mean you're overexposing yourself, again, you might be hesitant to invest, and rightly so. So they're probably the main two that I would say would be in the category to be hesitant, maybe sit back and see what happens. But overall, if you are looking at the data and the market and you feel confident and you are looking to invest for the medium to long term, then what is happening right now should be irrelevant. So that's my view on sort of who would be hesitant or maybe rightly to sort of sit back and watch the market. What do you think, Nick?
Yeah, just touching on those bits, I think, and looking at those particular subsets, when you say people that are flipping and looking at the short term, I'd say at the moment, whereas in the past you may have taken a punt, or you might have been, 20, 25% more willing to take a risk. Now, I'd say if you are doing flips, and people are doing it in the market, like obviously it's not ideal conditions, but people are doing it. If you are doing it, just make sure your numbers are spot on, absolutely certain. As Toby said, make sure you've got that contingency there. You need to hold, or you need to, delay things, etc. Just make sure if you are going into any sort of projects of any kind, the numbers really, really do stack up, and that maybe have a bit of a buffer as well. And then just lastly, you mentioned the word overexposed. Another word I would use is over leveraged. If you're really, really stretched and, income is perhaps going to fluctuate, housing bills are perhaps going to fluctuate, and you're really on the borderline, no matter how many properties you've got, if you're over leveraged, you're over leveraged. So just keep an eye on that as well. But those are a couple of comments I'd make on those two bits.
Yeah, and on the points of sort of flipping, or even if you're in a property transaction now, you could, I mean, with the secondary market and sort of how up and down that is at the moment, especially with mortgage rates, if you're buying right at this time, that's affecting your purchasing power. If you're in a deal right now where you are looking to get a mortgage in the next month or so, I would personally be going back and saying, look, we might have to renegotiate on this deal here. I need a bit more breathing space because
that's
mortgage rates are going up, and the vendor would have to be open-minded to it. So making sure, like we said, the numbers stack up and you've got that contingency in place, even if you're going for a purchase right now, there's still the opportunity to do that. I mean, I wouldn't pull out of a deal completely if you are worried. I would go back, try and renegotiate. I mean, the market that we find ourselves in lends itself to it as well. There's a lot of talk of gesundering. So that's the opposite of gazumping, which we see in markets like this where there is a bit of uncertainty. So gazumping is where somebody offers more. Gesundering is where you're going through the purchase process and you actually then go back and offer less. So yeah,
I didn't even know that one myself. That's a great bit of slang to pick up.
Yeah, gesundering. Again, you might not have, because in the markets we've seen ourselves in for quite a while, there hasn't been gesundering taking place, to be fair. But when you do find yourself in this market, and rightly so with the mortgage rates, if you're going through a purchase now, of course your numbers are going to change. So maybe go back, and if it doesn't work numbers wise, renegotiate. Because obviously if you're taking the mortgage product to the next month or so, that is important to do so. We do anticipate the mortgage rates to settle in the next year or so. So if you're not doing it until maybe next year, the following year, or the year after, then not really as much of a need to do so. But if you're going through the process now, a renegotiation is definitely something to look at to make sure you're in a comfortable position. Because moving on to who should invest, final point on that is, doesn't mean you can't invest now, but as we say, you've always got to invest correctly for your personal circumstances and your particular investment strategy. So that's what you've got to make sure. Now, to the other side, who should be investing now? Obviously, anybody can and potentially should be investing, as we mentioned, depending on circumstances. But realistically, as we've both said for multiple of times on this podcast, if you're looking medium to long term, you should be in no real dire situation. Obviously, as you would normally, don't be overpaying for a property. And luckily, it's not something you're seeing off plan as often, mainly on the secondary market or the open market, where you would be in bidding wars. Sometimes you would overpay, but make sure you're not overpaying and the deal was correct. But yes, getting into sort of an investment now, when you're looking medium to long term, yes, the market will fluctuate, but when you look over the long term, you should come out on the other side sort of very positively. Now, you then go sort of more deep into that. You should also be focusing on the areas where growth is highly likely to take place, and also where rental demand is going to continue strong. Now, Nick, if this is you're investing, you've got a pot of money, and we're in the market now, and you're looking for a location where growth is going to be sort of taking place over the medium to long term, and also where there should be rental demand, what sort of things are you looking for as an investor?
Yeah, I mean, firstly, the first thing I would say is, if you are investing, yes, go for high growth areas, but don't go for high risk areas. They're very two different things. There will be opportunities out there where the capital growth forecast is very, very high. You can look at even regions in like sort of the northeast, the secondary cities, perhaps what some people would consider, slightly lower caliber compared to the likes of Liverpool, Manchester, Birmingham, and London's. However, be careful. As Toby said, you've got to get somewhere which is going to deliver good capital growth, but also has those robust investment fundamentals where you're going to have the rental demand. And I'd probably like to see that's already had good capital growth, so we could see evidence and we could see an onward trajectory. So I'll be analysing the data. How have these areas performed over the past 5 years? What's the rental demand like there? On a micro level, and then looking at the investment fundamentals, as we always do. Education, leisure and entertainment, regeneration, government incentives, investment, transport links, all those things. And one area that we mentioned time and time again is Liverpool. I really, really do feel that it has been. Well, I'll tell you the other way I'd word it is we were looking at Liverpool, years ago now, but probably 3 or 4 years ago, maybe 3 years ago, we had people going in there, investing in there. And we were saying the same thing at that time. And look what's happened since. It's really important sometimes people can get caught up in these projections and forecasts of what's going to happen. But when we start to get a track record of where we're identifying these locations for our investors, and they come off and you see, 10% capital growth rates a year, that's what really counts at the end of the day. So even now, I would still say look at that look at that location. And I think going into Liverpool on a more individual level, still within the city, looking at postcodes and areas that's going to see regeneration and aggressive growth. And one that we've got our eye on at the moment is Liverpool Waters. I don't know if you guys want to give the guys an overview of that, Tobi.
Yeah, definitely. And I think your point about sort of areas which are risky in terms of growth is very good, because you will always hear about regeneration plans in secondary cities or towns, etc. But looking at them and look at their long-term plan, you just need to make sure that they're going to be there for the long term. Are they going to halt this regeneration if something happens because maybe the funding's not there? And again, using Liverpool as the example, a city like that, it's had those plans in a while, but we've actually seen that start to take off now. So that should give you confidence in the de-risking of that stopping. I mean, as soon as a spade went in the ground for that Everton football stadium on the waterfront, that would have been me going, yes, excellent, let's go straight there. It started for a club of that caliber and magnitude in the Premiership to be then moving their stadium there. That just speaks volumes for sort of the way forward that waterfront regeneration is going. They're not.
And that's coming from a Liverpool fan, guys. So
that is coming from a Liverpool fan, exactly. Yeah, but the one good thing Everton have ever done for us. But yeah, that just shows, that speaks volumes itself. And then you can then see the picture, because they're not going to go there if that regeneration is just going to stop. Commercially, for a club of that size, they would not be setting foot there if that was even on the cards at all. So that is a good point. And yes, coming back to the waterfront, it's an over 5 billion regeneration plan, which is spanning sort of over, I think, 10, 15 years, something along that sort of time frame, which this is what we would be looking at as an investment. Because again, mention the long term. If you're buying now, let's say something happens tomorrow, which we don't foresee, and the market does dip. Over the long term, even if you've bought now and it dips, you're going to see that come back up in a big way because of that regeneration over the next 10, 15 years, because we know a dip only lasts for a certain period of time and then the market recovers and always comes back higher in general anyway. But throwing that regeneration in the mix, you know that's going to happen potentially quicker or a lot more consistently as well. So that is a big thing. But yeah, you've got Peel, LNP, which are behind this whole waterfront regeneration. And they're the ones behind Media City, the waterfront regeneration in Manchester. And again, we always mention about this. Look at the track record, the credibility of those regenerations and what they've done for not only the property market, but the economy in Manchester and the areas that they're looking at. And that is their plan. They want to boost the local economies, which in turn will boost the property markets. They want to draw a good caliber of businesses and people to these locations. And we're seeing it already. There's a development we just launched. We launched the first phase, which sold out in record time, which is Mauritania. We've got another one called Aquitania, which has just launched, and right in the heart of that regeneration. Now, interestingly, again, the developer doing that is putting a lot behind what they're doing in their location at the waterfront. Very, very passionate. I mean, they're even going to be building a park sort of nearby. So there's green space on this waterfront location. They want to be linking the waterfront up with the city centre, which again is incredible to hear. And they're there for the long term as well. So I mean, this development has flown out and been received very well by investors, and rightly so. The 2 buildings they finished not too long ago are fully rented out. Great level of tenants in there. You've got doctors. You've got very high working professionals. You've got actors and actresses on sort of local TV shows here in England. You've got Hollyoaks, yeah, that's one of them. And then you've even got UFC sort of star living there as well. Not too sure if we can mention the name, but yeah, a UFC fighter, Liverpoolian, that would probably narrow it down. Living there as well. So just showing the caliber of people being attracted there already. And this regeneration hasn't even begun fully yet. So it's exciting. So that's something I would certainly be looking at. And it's great that you brought up Liverpool, Nick, because it's still one of our favourites. And one, when we're speaking with investors, the price point works, the yields are working. If you get short let capability in a development there as well, excellent, because that is performing very well. And again, in the long term, will do so with all this regeneration going on. So exciting times ahead for Liverpool City. But there are many more. But just touching on Liverpool as an example and what we would look for in terms of fundamentals when investing now in medium to long term to protect ourselves as best as possible. And we've got a good mix of that rental demand and hopefully that sort of good, consistent capital growth.
Well, it's a favourite of ours, isn't it? I think in our company history, it's actually been the biggest selling location consistently, time and time again. I know this month it has been, obviously, with the launch of the projects Toby mentioned. But one of the things that I really liked that you mentioned there is the thought and the consideration from the developer in terms of the actual community and what they're building there. So it's, we look at developments on a daily basis in different locations, and you can really tell the caliber of a developer when they're putting up perhaps just a single block, no infrastructure, no nothing around it. You can tell they just want to get the block up, sell it, move on, bang. This is really a site where you're going to see a lifestyle being built, a community. And yes, these are sort of sometimes banded around quite a lot and a bit cliche, but you're on the waterfront in Liverpool. You're surrounded by green space. You've got cafes there, al fresco dining. You've got a short stroll to the city centre, and you've got all the leisure and entertainment facilities of the new Liverpool Waters regeneration plan literally on your doorstep. So if you are active in the property market at the moment, or you're considering investing in the UK, highly recommend you review this particular project. Starting price from about 155, I believe, Toby, for one beds in and around that region. Reasonable deposit levels, and the completion date back end of 2024. But as Toby said, from a record who's delivered in the local area to a high standard, on time, and to now demonstrating the rental demand there as well. So can't speak highly enough of that development. So anyone wants any info, any further context on that, or a meeting at all, calls, etc., we'll be happy to assist with that and really give you guys some more detailed and comprehensive thoughts on our investment analysis of that site.
And if you want even more confidence in that development, particularly, one of our well, not even that, one of our members of staff is buying there. So he's securing his unit there. Another sort of developer partner that we work with involved in this development, they're buying units there as well themselves, which again just speaks volumes for what this development is on track to do. So yeah, that in itself should give confidence. But yeah, great. And like you, as Nick just mentioned, we can set up visits to the site, and yeah, the director who we mentioned, who's orchestrating all this, he usually does the site visits when he's available, and the passion that he comes out with and his vision is incredible. I mean,
it's refreshing to see, isn't it? It's refreshing to see.
Exactly, you buy into it alone just by his passion and what they do, and no, it's a great operation and one we're sort of really glad to see. So that's good. But yeah, in conclusion, in terms of investing at the moment, yes, we understand there are people that would potentially put their plans on hold, and completely understandable why. And there's people in certain positions where that may be the right decision to make. But as a whole, now is still a fine time to invest. There should be nothing massively stopping you. But as we say and always say time and time again, you just have to make sure it's the right investment for you and stacks up correctly for what you are looking to do as an investment.
Definitely. So let's just quickly recap very briefly. So from the points we discussed today, a couple of bits we want you guys to take away. We believe a bit more certainty has come out of the appointment of Rishi Sunak, and has been reflected in sort of the different markets around the world. If you are tight, if you're over leveraged, if things are difficult for you at the moment, if there's uncertainty in your job, consider renting for a bit longer. You might not just want to dump all your money straight into a property investment. However, if you are sitting on money and it's getting eaten away by inflation, and you want somewhere safe, secure, and somewhere that's got a good track record of performance, and we think Liverpool is a great market. As we touched on with regards to the flips and more hands-on investment strategies, really make sure your numbers are spot on. Don't take any risks at the moment. Lean on the side of caution if you're looking at exiting, in 12 months, 18 months, something like that. And then just lastly, a real nugget that I want to reiterate what Toby said. Don't do this if you're any of our investors, but if you are buying elsewhere at the moment, renegotiate, have a go, leverage it, play the game, and try and get yourself a better deal, get yourself more favourable terms, whether that's with a vendor directly, a homeowner, or a home builder developer. So you can definitely sort of play on the environment at the moment and see what you can do. But yeah, hopefully that helps today, guys, and gives you some good actionable advice to go away with as well.
Yeah, exactly. Right, we'll round it up and finish up there. So thanks for listening again to this one. As always, if you have any questions just about general property market or even any of the developments we mentioned sort of while speaking on this, or just general info you need, feel free to get in touch. Reach out via email, info@trackcapital.co.uk, and a member of the team will be in touch to assist you. Or if you want me or Nick directly about anything we've spoken about, just mention what you've heard and what we'd like to discuss, and we'll always get back in touch. Thank you for joining us, and we'll see you next time. Bye bye.
Thanks everyone. Bye bye.